This is our Forex blog for May 4th, 2011, and like most days you really want to buy the strongest currencies versus the weakest ones and sell the weakest ones versus the strongest ones. The Euro and the Swiss without a doubt have been the most consistently strong over the past few weeks. Daily, weekly, monthly trend of both of these are up, and the real-time strength of the Euro is very strong. So earlier today when the dollar was for the most part weak until about 5:30 to about 8, you could have traded the Euro dollar and sold the dollar Swiss. Let's take a look at the Euro dollar earlier today. From once it broke above the hourly right here, you had a nice little move up. The next pullback had a win. The market was really choppy here for about an hour and a half, and then that trend continued. When markets are above the upper containment band, typically they run out of steam, and also when you draw your fibs on the first move up, typically the fib target, look, the 1.618 fib target to within maybe 5 pips nailed the high of the day. Rarely do markets go above the 1.618 fib target, and especially when they're above the upper containment band. You also can see some strength kind of slowing down right here, and then on the way up here it had a lot of strength. The new FX tipping point on Momentum Pro really would have helped you not only catch this first move of this trade, but also let you realize up here near the high that the uptrend is very likely to be over. We'll put the FX tipping point and Momentum Pro on the chart, and I'll show you. Notice how when it was coming up to the hourly chart, most of the bars were green. The momentum moves were to the upside. You had this little sideways pullback right here, and then if you bought that breakout right here, notice very broad-based move up with very high volatility, and it hit the upper containment band with a counter trend sell signal, very likely to kind of stall right there. During that pullback, initially a lot of weakness, a lot of momentum to the downside, and then during the last 10 minutes of the down move, these last two bars, the downwards momentum and pressure slowed down dramatically, and so it pulled back. You got into that trade right here, and on the way up, other than one bar, the volatility to the upside was almost nothing. So you get out of your trade with 20 pip profit or a small win there, and you might have gotten chopped up a little bit during the sideways action, but when you finally got that breakout here, decent broad-based move up, high volatility, and notice as it's up here, very low volatility, with the exception of a few bars right here. And before it drops, you can see all the upwards pressure is all but falling off a cliff. So, at some point when it goes up, pulls back, goes up, and doesn't break that high, you got to get out of your trade. And aggressive counter trend traders might have sold the fib target of the first wave up, double top right there, and the percentage participation went down, volatility went down. You could have sold right here, and you never know how much you're going to make doing a counter trend trade. But on that first 5-minute bar, you saw almost all the euro dollar pairs going down with 140% volatility. The next bar fell too, and usually that means the market's likely to go down. You might have got out of half your trade here when it went sideways around 80, but you're short around 10. You made 30 pips on the first half, and because the trend was up earlier, you're not expecting to make much on the second move down. So the fib target right here is a great place to get out around 45 on the second half. Now we saw the Swiss was also strong today, and the dollar was earlier weak, so you want to sell the dollar Swiss. When it's above the hourly, it's more likely to go up. As you can see, it pulled back to it, found some support, went up, pulled down to it. When it broke the hourly right here for the second time, you might have went short. You would have had maybe a small profit or break even. Again, it came back above the hourly and fell again. You go short. It didn't really fall that much. You made maybe 15 pips. And then here, this is one of the only two entries we have. We find a trend, we wait for a pullback to get in, or we wait for a sideways consolidation. Here's a perfect example of a 2-hour sideways rectangle, sideways consolidation. You go short right here, and it just absolutely fell through the floor, about 60 pips down. Now I'll put the Momentum Pro in here. I'm not going to put the tipping point on just to save time for the blog, but the FX Momentum would have shown you on a bar-by-bar basis how far it's moving up or down on every given bar compared to all the other currencies. And notice as this thing broke down right here, we had over 3 times more volatility than normal. Right? So that's very likely to continue, and it does. And there's almost no green bars. No, of all the times during 5 minutes where the dollar kind of went up a little bit and the Swiss went down, the momentum to the upside was nothing. Right? So there would have been no way that anybody who used this tool would not have got into this trade and made at least 30 pips. Now during this little move up right here, initially there's some strength. Strength slows down, strength slows down. If you want to get short right here on a scalping basis and use the fib target to get out of that trade, you certainly could. Our trading zone's there. It's underneath the lower containment band. Most of the time when the price is underneath there, it finds support and goes up. Containment bands contain price, maybe 80% of the time. So this is an excellent place, probably the maximum likely profit target you're going to have. If you shorted it right here at 86, out at 62, you made 20 something pips. And notice on the way down right here, a lot of volatility to the downside, volatility, and then it slows down. So you just keep tightening your stop, and because it was slowing down its momentum, it's very likely to reverse here, and you get out. Again, with another 25 pips. So, there's no better tools in our software than our brand new FX tipping point, which measures the mass of the market, the percentage of currencies going up and down. And then the Momentum Pro shows how much they're going up or down. Because currencies can inch their way up or explode their way up. And anything at or above the white line here is pretty much an explosion. When you get 3 times explosion, those trends almost always continue, especially during more active times of the day. It becomes a no-brainer.